Finally, we have some good news for the U.S. economy. GDP numbers were reported today, and economic output has increased 2.6% compared to falling 0.6% last quarter. Bloomberg analysts had predicted a 2.3% increase, so it's good to see a better than projected output, especially since falling the last two quarters. But what does this mean as far as a looming recession? Well, economists don't think that we're out of the woods yet, but this is the first step in helping curb inflation and keeping the dollar on the right path. Now let's take a look at a dollar pair inside of the EdgeFinder. So here inside of the EdgeFinder, we're talking good news for the dollar. We're talking dollar strength with GDP numbers today. So it seems only fitting that we check out a buy for the US dollar. And we have one strong buy here. In fact, why don't we just go ahead and take a look at all major currency pairs? There's something coming sooner than you might expect. Are you ready for it? Major currency pairs are all pairs featuring the US dollar. So we have 3 buys, 1 neutral, and 3 sells, although this -2 is leaning towards a sell. Our 3 buys are USD CHF, USD CAD, and USD JPY. Now let's go ahead and take a look. Let's just go ahead and look at our top buy, which would be USD JPY. So that takes us to our USD JPY breakdown page. And we have a lot of stuff to take a look at here. Score of +6 gives us a strong buy bias. And COT data, or institutional trader data, also comes out to a +2. And we can look at that right down here. Institutional trader data, US dollar 78.5% or 56% long and 21.44% short. This of course gets updated every week. So if you've been following along with our videos, we've already looked at US dollar pairs. So we know that the institutional traders are incredibly long on the US dollar right now. And on the flip side, the yen, institutional traders are incredibly short on the yen, 19.67% long and 80.33% short on the yen. Retail traders, we have our retail score here, 35% long and 65% short, so retail traders favoring the short side on the pair as a whole. That gives us a +1 score here. Seasonality, +1 as well. Take a look at the numbers for October here. And historically speaking, all-time average, we're seeing an upward trend, but last 5-year average, we're seeing downward trend. Moving from November to December, however, in both cases, all-time and last 5-year, we see a downward trend. A very, very subtle downward trend, all-time average, a little sharper in the last 5 years. So at least November to December wise, expect to see a downward trend potentially. That's at least what historical data is showing. Trend reading is a +2. What trend reading means is that based on how this specific pair has been performing in the market over the past couple days or past couple weeks, the trend seems to be that it is trending upwards. We can actually look here at the daily chart and see that trend. So this goes back, the daily chart that we have here just goes back a couple weeks. So we have it listed at October 10th here. And for the next 11 days, we saw nothing but rise. And here on October 27th, we're seeing a strong buy, and our price forecast is predicting a big move to the upside following this trend. A little bit of consolidation, a little retest here, but it seems like it's going to be trending back in a bullish direction. Now our last scores here are GDP growth +1, inflation -1, unemployment -1, and interest rates +1 again. So we can take a look at that here. GDP growth 2.6%. Of course, that was updated today, 2.6%, while the yen sits at 0.9%. Inflation for the US 8.2% compared to 3% in Japan. US unemployment 3.5%, Japan unemployment 2.5%, and lastly interest rates 3.25% for the US dollar and -0.1% for the yen, giving us an overall plus 3.35% bias towards the US dollar, which of course is just the difference between these two pairs here.
Attention traders, this is not a drill. Here at Day One Trading, we are giving away $500. That's right, you heard it. $500 plus a gold VIP membership. Now with the gold VIP membership, you only got to pay one time, but here we're just going to give it to you, plus $500. How does that sound? For the whole month of October, by the way. So make sure to click the link in the description, enter the giveaway before the month is over. By the end of the month, one winner will receive a text message, so make sure that phone number you put in is correct. The winner will receive a text message from us indicating that they have won. So good luck, everybody.
Now we're going to check out some highlights from today's live stream featuring TraderNick and Tom from SimplyForex.
Yeah, so I went long dollar yen, and in hindsight, I look really silly for doing this. I like the trade, but here's the thing. This trade was painful to watch. So my idea here with this was dollar yen was coming down to this level where we rallied so strongly, right? Like there was huge demand, like massive. That's a couple hundred pips rally just in a single couple or just in a few short 4-hour bars. We came back to that level yesterday. I decided I'll pick it up long again with that idea. If it comes down underneath this, I will stop out. And so, of course, today I'm looking a little silly because the market did come down, grabbed my stop loss, and then went back up. Like I said, everyone has losers. It's just a matter of some people will show them, some people will talk openly about them, and other people will not. I always really respect people that do that because we all have them. It's just, do you choose to talk about them and face them? And I think even if you're not, a public, YouTuber or whatever, even if you're just in your private conversations with yourself or your trading friends, talk about your losers. I'm telling you, it's really helpful to address and look at a loss and say like, well, did I do something wrong? Or is this just going to happen sometimes? And it's okay. I stuck to my rules and, I'm just expecting a certain percentage of my trades to not work out. This was also a higher time frame trade off the daily, and I am interested in picking up dollar yen long, or at least attempting another long position should we get back down to this area here, right around that 144.5 level. I'd be interested in trying again dollar yen on the long side. So dollar yen, higher time frames, still looking bullish. Just on the lower time frames, looking really ugly. So the dollar yen is still very much something I'm willing to go long on. The commitment of traders data shows a clear favorite in terms of the dollar at 78.56%. So hedge funds, smart money traders, long on the dollar, short on the Japanese yen. So I am looking to buy USD JPY, but just not yet. Short percentage is very high. Retail traders are looking to short this pair aggressively. So that is another cue for me to look to get long if I can find a setup. And again, the price level that I like is another attempt possibly at 144.5 and maybe more aggressively around 145. Somewhere in that region, I'll look to potentially get long.
So yeah, let's start with the euro, guys, because obviously we saw, we had the big interest rate decision today. So let's start with this. So everything in terms of the interest rate decision, the deposit facility was all as expected, guys. But we can still see that we've had a bit of a negative reaction. Okay, and the reasons for that are is basically that the ECB said they would slow the interest rate rises. Yeah, so they've raised it today, but they suggested that they would start slowing the interest rate rises. Okay, so yeah, that was one reason why the euro took a bit of a tumble. And also, they also hinted at the fact that a recession is more likely. So these were a couple of reasons that we saw for the euro to take a tumble, guys. All right. So yeah, that was reasons for that. But now, guys, it's in an area of interest. So before the day started today, guys, euro US dollar was a potential trade idea. All right. So yeah, sorry guys, I'm just realizing how red I look on the screen. It's not sunburn. I don't know what it is. Maybe it's high blood pressure. We're not sure. But I don't look this red in real life. I'm going to have to find a filter. Anyway, I digress. So, euro US dollar. Yeah, this was a trade idea for at the start of the day, guys, because as you can see, price was clearly in a downtrend. Yeah, lower lows, lower highs, lower lows, lower highs, lower low. Well, not lower lows. And then price was basically sort of in this triangle, guys. As you can see, the triangle I've drawn with my gray lines. Yeah, we can see price was contracting in this triangle. And then when price contracts like that, chances are you're going to get a big movement in one direction. Yeah, so you can see price is just sort of contracting in this triangle. It's got nowhere to go, and then bang. Yeah, we see two very bullish days for the euro. All right, lots of euro buying pressure. So you'll find that, guys, when we have these triangle patterns, yeah, when it does move, it really moves out of that triangle. So for those reasons, guys, it was a potential trade idea for today. And this blue line here was my target. So these last highs here were a target. All right. So it'll be interesting to see what price does now, because if we look at potential areas to take this higher, yeah, this last high, yeah, is a potential zone to bounce off of, or even, yeah, these last lows here, even come back down to the triangle and bounce off of this level here. All right, so yeah, these have now become two interesting levels. If we drop down to the lower time frame, so I always look at the day chart, guys, to give me my direction. The day chart is my why, basically. Why am I long in this pair? Why am I shorting this pair? Or why am I staying the hell out of this pair? All right, but today, guys, I was looking for potential buys for this market for all those reasons. Come out of the triangle and has had a strong push upwards, and it had a bit of room to move into. All right, so yeah, day chart is always my direction. Okay, and then I drop down to the H1 chart, and then this is always my entry time frame. So those two gray zones that we just quickly drew, I would probably, yeah, oh, they look good. They look good. I would probably change this triangle here to include this action here. Okay. All right. So these are now potential areas for price to go higher for the euro US dollar. But like I said, guys, yes, it was quite bearish, some of the views. So it'll be interesting to see what happens at this level, guys. Okay. So if euro US dollar, if we do get a big push off of this level, then we could still potentially look for longs, guys. Okay. Remember, this is the H1 chart, or price could even come back down and test these lows here, which corresponds with that triangle. And again, we could get a big push off of here as well. So yeah, it'll be interesting to see where the euro US dollar finishes today after the interest rate decision. Also, guys, we had some US dollar news as well, but that was quite a mixed bag. So GDP was better than expected, but core durable goods were not as good as expected. That was quite a big miss, worse than expected. So it'll be interesting to see what happens with this pair today.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.